Good afternoon, everyone. Thank you for joining us today, and welcome to the fourth session of the Loan Vision Industry Insights webinar series. This one is a little bittersweet today because if you may have noticed the dates, today would have been the day the office returns from the conference. So I want to thank the team at CWDL for joining us because they definitely brought some happiness back into our week. My name is Jordan Pavelka, and I'm the Marketing and Communications Manager here at Loan Vision, and I am joined by Mark Wilson of CWDL. He's going to be leading the discussion on today's topic, Is Your Accounting Department Maximizing Efficiencies and Driving Data? Mark is a managing partner at CWDL and is responsible for the vision and direction of the practice. An entrepreneur at heart, his experiences as a financial executive allow him to analyze and advise CWDL's mortgage banking customers with a client-sided perspective. He is also joined by Dustin Pfluger and Casey English, who will be chiming in from time to time on today's call. Guys, how are you doing today?
I'm doing great. We're really happy to be part of this series and happy to share some of the things that we've learned throughout the years. And hopefully everybody on the call finds it valuable.
Well, we're definitely excited to have you. And before we begin, I just have a couple of quick housekeeping items. We are indeed recording the call, and we will be sharing it to all registered attendees. All attendees are also muted, but we do want this to be interactive. So if you have any questions, you can send them to us at any time using the chat box, the question and answer box, or if you would prefer, you can hit the raise hand button and we'll unmute you so you can ask your question. I am going to turn the time over now to the experts. So Mark and team, go ahead.
Thank you very much, Jordan. I appreciate it. So I just want to reiterate, I normally do these sessions and we do roundtables all over the country and do these, usually we do it live. And so the interactive part is the part I'm going to miss the most today. So if something comes up and you have a question, please ask it. I think, what works best is when peers that are involved in the industry have a question that might be something I haven't thought of. This is a newer presentation for us, so we'll gain knowledge as you ask questions and we'll be able to share from our experience. So please ask once again. So today we're going to look at your accounting department. The accounting department is an integral part of any mortgage bank, and we have a unique way of looking at it, so we'll share some of that with you. We'll explore things of what should management expectations be of the accounting department. Is your team being used to their highest and best use? And are you using the technology to its full capability? Those are some kind of broad stroke areas we're going to hit, but we'll dig in some of those particular areas. Oh gosh, okay. So we do have this slide and I wanted to share with everybody. Dustin, who is on the call, he's one of our mortgage banking partners, had a new one arrived, and I haven't had a chance to thank Loan Vision directly, and I thought this was the best time to do it is on their during their webinar series. So Jordan and everybody over there, this was a great gift you sent over. We shared this throughout the firm via Teams, and I think we got the most likes and hearts and loves that you could possibly imagine.
He is precious.
So proud. It was so cool. So it was great. It was a good way, obviously, with everybody working remote and us being, I don't know, in 9 different states or so with employees, it was a nice way to connect. So it was really cool. So thanks for doing that. Real quick, I won't spend a lot of time about CWDL because I want to dig in, but just for those of you who don't know us, we are a CPA and consulting firm with clients all over the country. Like I said, we have employees, I think, in 9 states or so, physical offices in California, Texas, and Arizona, and lots of people on the East Coast. So we don't just dabble in the mortgage banking industry. It is our focus here. So from audit, tax, consulting, outsourcing services, we help with Loan Vision implementations and other things. So that's about as much of the commercial I'm going to give you, but we are, we're here to help support. And so if you have questions, please give us a call. We're happy to help. Okay, so what is the challenge with your accounting department? I always look at this from a high level. the accounting department really is a business within the business. So I think a lot of times owners and CEOs, they know how important accounting is, but they might not necessarily think of it as a business within the business. And so when you're looking at your accounting department, and think of it as in the same way that you would try to figure out the overall vision of the company. What that means is you want to have strategy sessions with the accounting personnel and figure out what is the best direction from the accounting department. Most large companies, from large to small, have people working in their accounting department that are asked to do a lot of different things. In our experience, from CFO all the way down to clerk, as your accounting department evolves, you'll have different levels of needs. So as you're a growing company, you might have a huge need in accounts payable. You might need more people towards the top from a staff accountant level. And so it's really a tough thing to manage. So what happens is oftentimes, and what will hurt an accounting department from meeting their particular goals, is you'll have staff accountants that are trying to push out things that really a controller or a CFO should do. And the opposite's often true. So you'll have a CFO that is spending time helping with bank reconciliations and other things. So looking at your accounting department, analyzing what everybody's roles are is really important and will help improve efficiencies and creating those goals around that. So I think an important piece of that is, what are the expectations of your accounting department? If you're a leader in the accounting department or you're the CEO of the company, what should your expectations be? And really understanding this concept of the business within the business, the who, what, when, and why for your accounting department. So who is your primary customer in your accounting, if you're as the accounting department? So the primary customer is the leadership team. That's everybody that runs, from sales all the way down to operations. There's lots of things that come out of accounting that they need. So your customer is really the leadership team. So what are you giving them? Obviously, you're giving them reliable data. I mean, it has to be reliable so they can make decisions, and that's a critical component of that. When? So we often get questions from CEOs and CFOs as we're onboarding them in our accounting service group, and they want to know, like, when should I expect to get my financials? Because sometimes we get, some books are closed super late, some are super early. If you have a really well-functioning accounting department, you should be able to get your books closed out by the 10th of the month, and almost never after the 20th. So just think about those two dates as a good, reasonable expectation. And if you're not hitting those goals, then there's areas that should be focused on, looking at where the bottlenecks are. And then why? Why does that matter? Your customers, being the leadership team, need to have timely information to make the decisions to run the company. So obviously, if you're closing the books, a month late or a month after that, you're already into the next period. So all of the people in the leadership team are in a really difficult situation to make decisions. And let's face it, the one thing we know about mortgage banking is it's constantly changing. In 2018, we had margins that were compressed, and we were really struggling to figure out how to make money at that time, right, as an industry. And the accounting department has the keys to some of that knowledge. As long as the information is being done timely, you can predict out what's happening in the next month or two. It allows management to make changes so the company can be profitable or at least survive during those times. And the same is true in 2020. We're seeing historical volumes this year. People are doing more and more business. And as a result, accounting departments, just like operation, are being pushed to their limits. So having the ability to predict that growth, finding out where you need to scale, All of those things really are born out of this idea of having stuff, the data come out that's both reliable and timely. Some of the pitfalls, what makes an accounting department not efficient is, if your technology isn't up to its full potential, that's a major problem. I think oftentimes we have key accounting personnel that are doing so many things that as soon as you realize the type of growth that we've had in 2020, there's no way that they can continue to do that work. So what's that do? It makes books get closed out late. People are working overtime, and oftentimes they become overworked, and the data starts to get flawed. So having a plan in place for scaling up and scaling down is really important.
Mark,
yeah.
Not to interrupt, we do have a question here, and I think it's actually quite relevant to the staffing order. The question is, are there metrics for the size of an accounting staff for a company doing between 1,000 and 1,500 loans per year? Do you have any metrics that would speak to that?
Yeah, I think what's always critical, the short answer is I don't have a black and white answer for that. But if you're using the technology to its full potential, you would have, obviously a properly staffed accounting department. I wish Susan was on the call. Is Susan on the call? I would say, maybe 5 to 8 people could really run that department really well. And that might be a little over for that number of units. But we'd have to take a look at it and understand what everybody's doing. Not all accounting departments are the same. A lot of accounting departments have special projects that are weaved throughout it. So maybe somebody's working on creating a proper KPIs for each division. So we'd want to know and take a look at it. I think one of the most important parts is to look at your labor efficiency rates in your accounting department and see how those are moving over time. The best measurement we always talk about is, where are you at today from an efficiency perspective, and compare that number to yourself as it moves out. And labor efficiency is, you take the total payroll for your particular department, and you need to figure out how much revenue comes out of that. If you tie everything back to revenue, you'll have an idea. Or units is also might be a better way to look at that, because margins change over time. So I don't know, hopefully that answered it. I know it sounds a lot like it depends, but we would look at your department, we could figure that out. Any other questions that you're seeing, Casey?
Nope, I don't see any other questions. And Susan's she went over, she's jumping on here in just a minute, but
okay.
Yeah,
right, cool.
No other questions right now.
Yeah, maybe we'll ping her back on that too. Susan's our director of accounting and outsourcing, ex-CFO and controller, and she oversees our accounting group. I think we have 60 or so clients on the accounting outsourcing model right now. So she might have a really good perspective on that. So the other part is the lack of mortgage banking knowledge. So I think that's also a key component. They either, and those are tough people to find, but when you find, if you find somebody who's willing to put in the time, getting them trained up in mortgage banking is really important. And I think we already touched on, oftentimes they are overworked. So if they're overworked at multiple projects, that kind of deteriorates the what side of the equation of having reliable data, and sometimes pushes it past its due date. So just some normal pitfalls. When you look at leadership in the accounting department, it's always important to look at, do you have the people in the right seats? So, and when you do these type of evaluations, you want to survey the people that are actually doing the work. We tailor these questions often around what do you like to do, what don't you like to do type of questions, to try to get some honest responses. But when you look at it, is what are they spending their time doing, is the work they're completing measurable? So is it something that, should take, 30 minutes to do and it's taking 4 hours to do? And if it's taking 4 hours to do what? Those are where you start to find where the bottlenecks are and discover where the solutions might lie. Are they being asked to do work that's not appropriate for their skill level? This is probably the number one problem we see. We see CFOs doing bank reconciliations, or we see really staff level people asked to do forecasting and be part of the strategic team when they don't necessarily have that skill set yet. Not to say that they won't. And I think a lot of times CEOs see potential in accounting personnel and know that eventually they will be able to be a CFO. And I think it's good to put them on a track to attain that. But it's a pitfall to think that they're already there. So take a look at that. Do they get pulled into special projects? I think I see this all the time, especially at the bookkeeper or accounts payable position. They might be able to get their job done in half the time, so they're constantly pulled in other special projects. Those special projects take their normal work week and make it a 70-hour work week, and other things start to fall behind. So just really being honest with yourself, looking at what everybody's role is, and are they in the right position for that? Is your accounting department scalable and cross-trained? I think we hear it all the time. We'll meet with a client and they're concerned that a key person on their accounting department might leave, and if they leave, they know where all the passwords are. They're the only ones who know how to do a certain key function and all these things. I think that is a limiting factor of any accounting department, and should be attacked with that at all costs. Like meeting with those people, finding out what they're doing, finding out where there could be cross-training opportunities, and allowing the accounting department to be scalable. And really forcing people to take vacation. I know that sounds crazy for some leadership people we talk to, but you really need to have an accounting department that isn't dependent on any one person. Having that ability to scale and be cross-trained is a critical component of that. And then back to the point of looking at this as a business within the business is, do they fit into your culture? Do they fit in the culture of the enterprise? Do they feel tied to the vision of the company? I think sometimes accounting is put off to the side, and the sales and growth and production team don't necessarily look at accounting in the same way. The companies that we see that are the most efficient and most focused, everybody's tied to the vision of the company and understand how they fit into it. This helps eliminate some of the challenges between sales and accounting and production and accounting. And I'm sure there's accounting departments that are irritated with loan officers who want to get paid early and because they funded a deal and they need to get their check before payday, and all these other things that we see that create challenges within an accounting department. But once you get that accounting department tied to the overall vision of the company, and everybody starts pulling the rope in the same direction, you'd be surprised to see how that actually helps with the efficiency of the group in total. And even LOs will start to respect the accounting department and understanding they have a job to do and can't just stop to cut a check that day. So thinking through that, really important. Staff development starts with selecting the right people. So I think we hear oftentimes, I found somebody that will work for $18 an hour. Super stoked, got them in here. They're just gonna be doing some minor things. I don't want to focus too much on the dollar amount, but efficiency is attained by having the best people you possibly can in a particular role. And that starts with selecting the right people up front. Invest in the training. The data that you're making decisions from comes from your accounting department. It's the heartbeat of all decisions that are made in the company. So make sure that the people are trained and doing their job to the best ability. Constantly evaluate them, and then elevate the ones that show promise and can help drive those decisions and be part of the strategic future of the company. So just kind of a basic roadmap. Of course, this works with most departments in any company, but when you look at the accounting department as a business within the business, I think this is a fast or a better way to get you to being as efficient as possible. All right, and then leveraging technology. So we're here with LoanVision today. Those of you who are on that system, congratulations. It's a great one. You know, are you using all the technology in your company to its full potential? Is there automation that you've incorporated? To the question of, you know, if we're doing 1,000 units a month, well, if you're using QuickBooks, you're going to need more people in your accounting department than if you're using LoanVision. So understanding all the pieces that go into your accounting department really is important, but leveraging technology is critical. So, and invest in making it great. I think a lot of companies will make a leap into a particular software platform and do the bare minimum to get it onboarded. And what happens is that onboarding doesn't always go great because they don't want to invest in the amount of time and effort to put that in. So, so invest in making it great. Seek to learn what you don't know. The way to do that is to communicate with other peers that are using similar technology. Reach out to industry experts who understand what they're doing with it. I think a big pitfall that we see is we have clients that will have amazing technology and they'll complain about it, but they've never been to a user conference and never used the tools that are available to them. Most of these software providers have really good resources. They've spent a lot of time trying to get knowledge in the marketplace. Invest in your people in the department and have them become experts in how to use the technology. Back to the training component. So huge area that we see some limiting, limited use that could really be improved across the board. I just put LoanVision up there, but this could be, from your LOS system all the way through. So really making sure that all of that is being used to its greatest potential really helps to increase efficiency.
Mark, if you don't mind, just from our perspective as well, this is incredibly important, as the technology vendor. We absolutely 100% see a difference in departments with the customers who do come to the trainings and take advantage of the resources, because not only are they showing initiative, they're taking what they learned and they're using it and they're adapting it to what they need specifically. And you can definitely tell a difference in the departments that do that versus the ones who just get the system, okay, it works good, it's fine how it is.
Yeah, no, I think that's true. We do, we get asked often to come into a client that has a particular system up, and we'll do a full-blown technology audit to see if they're using it to its highest and best potential from our experience in using it with our client base. So, and I think obviously LoanVision has a lot of internal help for that as well. So you're right. Like there's amazing tools and opportunities. And obviously I think a lot of people on this call are probably using them because they're on the call because it's part of your webinar series. But all the people who didn't join today, let's get a message out to them. But
yeah, I'm looking at a lot of these names and they're like, yeah, we know, we were there, we've been there. Can keep going.
Keep going. Got it. Yeah. All right. And by the way, the user conferences, especially LoanVisions, are always a little bit more fun than some of the others. But anyway, well, we'll move on.
Thank you.
Yes. Yeah. Sure. Okay. Cool. I think. Oh yeah. So this is kind of the wheel of quality control and accounting. I think if you take nothing else away from the slide, just know that that's constantly moving. It's always changing. It's never a destination, just like in any business. And this is a business within the business. I know I've said that 1,000 times. So, but just know that the accounting department isn't going to be in constant change. You're never going to say, okay, I got accounting perfect and I'm ready not to look at it anymore. It's a constant review. Is it accurate? Is it on time? Is our closing process need to be changed? Because we went from doing 25 million a month and now we're doing $1 billion a month. Those growth, every time you grow 30% or more, a lot of your processes need to be changed and updated. Constantly evaluate it, modify where needed, and make sure that you're really delivering to your customers, which is the leadership team, and helping them to make the best decisions. And it's a critical function of the accounting department. So from technology to people to the leadership team, all of these things work together.
Well, and to kind of piggyback on what Jordan said, as well as what you're kind of pointing out, I think it's important to sometimes bring in a third party, not even pushing us, anybody else. I mean, but somebody that's experienced in the space, just because sometimes you don't know what you don't know. And I think accounting is always kind of viewed that way. And sometimes when you get somebody that has some insight and some industry insight, you're able to kind of benchmark yourself and really see, hey, am I doing this the best way? Is this my most efficient use of my time? Do I have, AP, a controller, and a bookkeeper? Do I need all of those? You're able to really assess that when you have someone else that can come in and take a look at what you're doing, comparatively speaking.
That's right. I think this is a good time to pause a little bit and encourage some questions. Do we have any coming through?
We don't have any at the moment, but you guys, like I said, you can also absolutely use the raise hand ability, so we can unmute you and let you put in your 2 cents if you want to, talk about what you guys do. Like I said, a number of the people on the call are Loan Vision customers and have done, a lot of the things that we're talking about. So we'd love to hear from you guys.
Yeah, I think one thing I'd like to encourage is we run what we call EOS, which is our entrepreneurial operating system. We run it internally with the firm, and we run it with all of our clients. And it's a process for really doing a strategic plan with your accounting department and how it ties with the overall vision of the company. So if you follow a process, we're happy to talk to you a little bit about that, but really taking the time to sit with your accounting group and figure out what's working, what's not working, what does a really efficient accounting department look like for your particular company, and then creating a roadmap of how to achieve that. If you and do a weekly check-in on those particular goals, I think you'll find that could be pretty transformational if you're not already currently doing that. And that's not sitting in a meeting once a week. This is a different process than that. This is almost like creating a plan or a business plan for your accounting department. It doesn't need to be a written 18-page thing, by the way, but just creating identifying strengths, weaknesses, and what you want to do going forward. Did I see something pop up?
Yeah, we just had a question pop up. Lisa would like to know, she would like to see some metrics on the sizing of accounting teams.
Okay, I don't have those here, but we can talk through that. Susan, are you on the call right now?
She's still stuck on this other call, so she's actually not yet.
Because it'd be great if we can get some experience shares from her, what she's seeing from some of our clients as far as size of department. I think it would be good to ask a more specific question or to that person. I'd like to, obviously if this was live, I'd say, well, is that because they feel like their accounting isn't being done correctly or out on time, or what's the more, I'd like to dig in more of what the question.
Hey, Mark, I got a question as she's waiting. It's kind of a follow-up to that maybe it's going that way. You know, I think in the accounting department, most of these people that look like are on the call are CFOs or controllers or in the accounting department, which I think a lot of times what I hear when talking about either moving softwares or hiring an additional person is, you know, how do we justify this to management, either the software or, you know, an additional head in accounting? And I mean, just I know that's kind of a general question, but what would you say? I mean, you know, I think a lot of people look at these as cost centers. So what's your recommendation there, you know, from your experience owning a company and whatnot?
Yeah, I think that's a great question. I would ask the decision makers, or what keeps them up at night. You know, one of the hardest things to do as a leader in a company is to make the right decision of the direction of the company. And if your accounting data is not accurate or it's late, you're literally operating in the blind, right? You're making decisions based on your gut. And I will tell you, a lot of times CEOs are really good with their gut, in my experience, but that data that comes out of accounting is critical for giving them that information. And so investing in your accounting department is investing in your company. It's investing in your ability to make smart decisions. And it really should be a no-brainer for an for the leadership team is when you have a high functioning accounting department, it's a game changer. It really is, because then there's no question of what, you know, of the decisions that you're making. At least they're based in solid facts that are coming out of your company.
Lisa's really wanting to prove efficiencies. So I think that, and I think you still probably are going to need to dig a little bit deeper. So
yeah, well, I would ask Lisa, when are the books being closed out? Are they being closed out by the 10th of the month? Is the data great? Are you able to drive KPIs by department? And if they are, then, you know, then you might be properly staffed, you know, you might be in a good position. But if you're not, then it's time to start looking at those roles and do evaluation of, are people in the right seats? Start there. What are they spending their time doing? And if they're working too many overtime hours, then you know you're not properly staffed, right? You're going to need to get some additional help.
And Lisa, I'll chime in from working with you before. I can attest to that, you being an efficient accounting department. I mean, you guys are always closed quick, you know, early, on time. You know, there's not many of you in there. So yeah, I mean, I think, you know, we can probably get some KPIs and get back to you on that, but I mean, just a test to working with you, that is.
Hey, Lisa, you should be able to talk now.
okay, thank you. Hi. So yeah, I just would like to benchmark ourselves against other accounting departments. I think we have an awesome team, and I would like to, you know, have some metrics to be able to shine. I mean, we close our books really in 4 days with 5th day of review, and we only have a team about 4. We just added a 4th person. So I feel like we are pretty efficient, but I would like to have some metrics to back that up.
And Lisa, correct me if I'm wrong, but that's 4 people, not including yourself.
That is correct. We just added a 4th person, yes.
I mean, obviously, Lisa, we had a conversation a couple weeks ago, and you guys are really killing it. And I mean, Lisa is the controller, and she does a lot, and she really, yeah, you guys are great.
Thank you.
Yeah, no, that Lisa, it sounds like you're doing great. I mean, with the amount of production you're doing, you know, I'd say compared to some of our other groups, that's remarkably well. Closed by the 4th of the month's remarkable. That's good.
Lisa, would you feel comfortable sharing how many units you guys do a month?
Yeah, right now we're averaging about 1,500 units a month.
Yeah.
Okay. We do have another question. Are there standard KPIs, Mark, that your customers typically use because they use Loan Vision but haven't brought it to the point where they are running KPIs?
Yeah, so you have financial KPIs and then you have operational KPIs, and some of the easiest things you would look at in an accounting department are, when are the books being closed out? That's a simple thing to track. How many errors, or how often are you needing to restate financials? Like if you're doing that often, you have a problem, right? It's more from an error perspective. Looking at your units, look at your LEAR for your accounting department. That's how much are you spending in your accounting department compared to the overall revenue. If that number starts to grow the wrong direction, you're probably understaffed. Number of units, you would look at amount of overtime in your accounting department. If you have a lot of people working a bunch of overtime, those are areas to look at. And I know this isn't your typical KPI where it's, we're talking about gross basis points and margin and number of number of decisions made by underwriter per month. This is a little bit different because what we're doing is we're looking at the accounting department from an operational efficiency perspective. Hopefully that helped answer the question.
We had another question pop up. Brandy, are you, I'm going to unmute you so you can provide a little bit more, because it doesn't look like it's quite a question. So I want to give you the opportunity to kind of elaborate on what you're saying. So you should be able to talk now, if you would like to.
I would just say, what Brandy is saying here is, it looks like she's being it looks like you're doing pretty good, pretty efficient. I would ask, the only follow-up, Brandy, would be, are there any special projects or other areas that the leadership team or yourself would like to get more out of the accounting department? I think you get to the base. You get to like that base, not, you kind of have the evolution of an accounting department. It's like, okay, now we're closing books by the 10th of the month. What else could we do to help management make a better decision? And then you start putting out a management report that everybody can read, they understand, by department. You help identify their KPIs, make sure that they're living up to their particular KPI. You don't necessarily make sure they're living up to them, but you provide the information for the leadership team to evaluate that. So
yeah, I was actually just providing feedback to Lisa, and just in regards to the size of the company, number of units that we were doing, and kind of our process.
Got it. Yeah, no, that's great.
Thank you.
Yeah.
Okay, sorry.
I think one of the great takeaways that we'll have is we'll help put together some KPIs for the accounting departments, how to evaluate them, and maybe we can share that on a follow-up, if that's okay, Jordan. I think that's one area that's popped up a couple of times. Maybe we'll create a standard KPI list for accounting department.
Yeah, absolutely. And what I'll do, we can, if you want, I can include that in the email that I send out with the slides and the recording. So it may be an extra day or two to get that out to you guys, just so we can have everything packaged in nice one little email for you. Does that sound all right for you, Mark?
Yeah, no, that's great.
Awesome. Well, it doesn't look like there's any more questions. Did you have anything you wanted to touch on, Mark, Dustin, Casey, any of you guys?
No, I think I really appreciate you asking us to be part of it. Hopefully everybody found some value. If somebody wants to send me a question or follow up, my email is up on the board there. Feel free to do that. If there's anything you wish you would have heard, we constantly are trying to improve anytime we do anything like this. So obviously, outside of what we've already talked about, please let me know. We would like to do that. We know everybody's time's really valuable. So I appreciate all of you spending it with us today. And if we could ever help you, please let us know.
Yeah, and if you guys, you also can send your questions to me and I can get them sent over to Mark as well. And I want to thank Mark and the team over at CWDL for being a part of this. Like I said, this month's been a little bit hard for us, so we're excited to put this series together for you guys. Next week, we will be joined by Santo Schiarelli of ACS. He's going to be talking about the PPP loan forgiveness, going through that. And this series, honestly, guys, has been so well received that we decided to add some more. So you'll be able to look out for more registration links. We've decided to extend it a bit into October, and Henry over at Spiegel Accountancy Corp is going to talk to us about reporting responsibilities of management and auditors, and that's going to be on the 7th. So again, thank you guys. Thank you to all of our sponsors. Thank you to CWDL, and thank you for making this a great series. We'll see you guys soon. Thanks, and have a wonderful rest of your day.
Thank you.
Thank you.
You guys.